Okay, let's go ahead and get into the stock market technical analysis. It's been a few days since I put out a video, so I'll go ahead and get one out. We're going to go through the broad markets, look at some individual trade ideas, and we'll wrap up. Drop me a thumbs up if you guys are finding value in the content. I do appreciate it. Feel free to join in the private member group. I have been commenting and posting charts and stuff in there all pretty much consistently for the last couple days and everything. So link in the description below on that one. Let's get into it. Triple Qs. I'm looking at a weekly chart right here. And I just want to kind of start off on the weekly and kind of drill down. You'll see here on the weekly, this is going back to 2009. We have some resistance. This, you can see my red line here was marked out. We had a lot of reactions on that trend line for many, many years. And then here's COVID, basically the COVID drop. They did pop it above there just briefly, but we're back below there. And if I zoom in, you can see we're kind of right in that range right now, all right? So it doesn't seem to be holding as much validity anymore because it is, breaking out and breaking down. But I do want to kind of keep that in mind. We are just barely above there on the weekly. And we, the price action has been pretty muted for the last few days. So keep that in mind. Now on the, I guess the other big development on the weekly chart to take note of is the negative divergence. It's been intact. And if I can just zoom out, there it is. We've really been diverging since about summer of 2023. So for almost a year now, we've been diverging on the weekly chart. Now that can continue. We can continue to diverge. Divergence doesn't tell me that I want to short, but it does just have it is a condition that this rally is likely starting to run out of momentum. Okay, and that's what it's saying. So keep that in mind. Now, if I go down to the daily, the big thing that really I'm keeping an eye on the daily, we did have a bearish engulfing right here on the daily. It's right there, and we engulfed the previous day's candle. Basically, that was on last Thursday, and we did see some follow through selling right here over the last couple days. Little relief rally, but I think there's probably some continuation selling that's going to come into play here pretty soon. Basically that bearish engulfing, the way you treat it is treat it as a top, all right, until proven otherwise. So there's the top. I'll mark it out. Now, if you get a daily close above that level, and right now it's about 46.75, a daily close above that level would negate that as a top. We had the bearish engulfing previously right here, and you can see I've got the top marked out. That was a bearish engulfing, and it did hold for a few days. They did drop it down to this support level right here, and I'll kind of highlight that. And then that bearish engulfing was taken out right there on that day. So if you were shorting, you would want to stop out basically right there. All right. When you recovered that bearish engulfing and had a daily close above it, that's the area to stop out. And you can see it went on to rally. So that is how we'll treat this bearish engulfing as the top. And as long as they can't get a daily close above it, then it will remain as the top. The other level to keep an eye on the daily is now we do have a trend line to watch. You can see here, and then that's where we got that third reaction. So I'm guessing that we're going to come down to that trend line. All right, that's what I'd be looking for. That's kind of what I'm looking for right now. So top is that level, and the support is that trend line. The S&P 500, the SPY, you can see here, this is the bearish engulfing. It's just barely a bearish engulfing because we did engulf the previous day's candle. So again, treat that one as the top. And then you would want to kind of line up this trend line here. You can see here, there's this kind of trend line that matches with what we're seeing on the triple Qs. And if I extend that out, it basically is an upward trend line. So that would be its support. All right. And it just depends on when we hit that. All right. And those are the levels. Those are really the two levels that I'm watching for any technical change. Support down here along this trend line and resistance right there at the top of that bearish engulfing. All right. Now, this market, and I've talked about this to the private member group already, but this market is about two things, two themes that are out there. One is interest rates are going to fall, or they are falling. That is kind of the theme. And then equally, AI is going to run the world, or it's kind of an AI mania, basically. So those two concepts. So in general, we want to continue to look for technical changes around those narratives. Here's the semiconductors, SOXX. You can see that basically we've got an uptrend line to watch. Support. There's one right there. There's a reaction. And we're starting to crack it. It's not, we haven't quite cracked it. Again, you want to see impulsive selling. So we'd want to see, if they just keep it right in this area, it's just not impulsive enough to validate as a break of trendline support. So you want to see impulsive selling. Otherwise, I think they're going to hold it, and you could see another rally. So still watching that. I'm still waiting to confirm that we get some impulsive selling to break this trend line. We don't have that yet. And then the big part of this is obviously Nvidia. That's been, you can see today, and again, look at the Mag 7. They play whack-a-mole with these things. Basically what I've noticed is, you'll have one go down and then two others pop up. They rotate money from one to the other. And that's kind of how they try to keep the market propped up. Algorithms, market makers, institutions. So money's coming out of Nvidia, going into Amazon and Apple. Tesla's not really super relevant anymore, but Apple and Nvidia for sure. And that's it. That's really what's going on. But here's Nvidia, and Nvidia, you can see we have this uptrend line to watch. Support. There's some reactions right through there. And so again, you'd want to watch that trend line. A break of that trend line would be a technical change. Otherwise, that's support. And then if we do break that trend line, there's some key levels below. There's a bigger trend line way down here. This comes off of the October 2022 lows, and you can see support. There's another reaction. There's a reaction. So again, you break that little minor trend line, we should head down to that major trend line. Okay, so that is what to watch for there on Nvidia. Trade idea here, DVN. This is oil. Oil's been rallying. Like if you look at the oil futures, let me just jump over to that real quick. Here's oil futures. You can see really since the beginning of June, oil has rallied about 12%, but then some of these oil refiners have not really kept up. So, I'm looking for rallies here in some of these. Here's DVN. You can see what I like about this one is you basically you do have some bullish divergence showing up on the RSI and slightly on the PPO, and you've got this trend line or this downward channel that was acting as good resistance. Lots of reactions on it, and we broke out a couple days ago. All right, breakout, and you can see we're back testing it today, and the buyers are stepping in. So that, to me, it's objective to buy on breakouts of resistance. It's objective to buy on tests of support. So it's to me, this looks like an objective area for going long for that next move higher in this DVN stock. I talked to the private member group a couple days ago, and I bailed on the small trade that I had on this one. Again, we were looking for it to hold support. It didn't really hold there, broke down. There was a potential trend line right here. Again, I only marked it as potential because I only had 2 data points. We just went right through it. So I can't really say that's a trend line. So we get rid of that one, and we're down near these reaction lows, but I just don't see any indication of a reversal or anything really. Took out the divergence. We're really oversold, so yeah, you're probably going to see a relief bounce, but it doesn't, to me, look like there's any kind of a trend change going on. Maybe extend this trend line out, and if we can kind of grab that and extend that out, we might have something to look at if we back test, but that's still down farther. So in general, there's nothing bullish here right now, so just have to let that one go. And just I cut this trade many days ago, and I told the private member group, seemed to make sense to get out of it as well. So that is that. Home builders, PHM is the one I've been trading, but if you look at the ETF, the index, the home builder index, you can see continuing lower, sitting at support right about now. So you can see we've had several reactions here at the support line, and we're just back down to it again. So I think it's going to break. There's big negative divergence telling me that we are going to break trend. And I do believe that these are going to break support, but it is support until broken. So we have to respect that. PHM, you can see the, same thing, sitting right there at support. It's about 109. A break of that, this should flush pretty quickly down to this $100, 99, $100 mark. And that is the target right now. That's the, on this bearish rising wedge here, you take the widest part of the wedge, mark it out there, then you take it at the point of the breakdown, and it's about there. And that does set us up for a move down to about 95.80. But again, we have this clean reaction zone right there with several reactions on support, and it's about that $99.50, $100 mark. So for me, that's the target. And it's a drop of about 9% or so down to the target. And I still like it, although we are sitting on support. So maybe we bounce here. This one, Chewy, was a trade idea. If I roll out, it was a short, but it wasn't a great short because this thing's already down from the highs. It's fallen from its all-time highs 80-90%. And you have this downtrend line right here on the daily chart. Lots of reactions. All right, resistance, resistance, resistance. And I pointed it out. We were at resistance the other day right there. And so it made sense to take a shot on a short, but it broke out. All right, there's your breakout right there. And it's been rallying. So that's a breakout. There'd be no, there'd be no reason to be short this thing after it just broke major resistance. So to me, it's really a long, and you'd want to potentially buy on support. Okay, momentum is strong too. You can see you've got bullish momentum there. So it is, to me, it's a buy the dip stock at this point in time, and it should continue to rally. This one, TR, also broke out. I think I pointed this out in the private mem group, possibly in the public channel, but in general, you've got, look at that, resistance, 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 and you hit resistance there, and the very next day, looks like you gapped up, and that's a breakout. Okay, so you broke out, and boom, it just ran. So that's the trade. It's kind of already, it's not objective to go long right now because it's already kind of broken out. You got some resistance up in there, so but you could potentially buy on support. All right, buy on back tests of support. We'll see where this one closes today, but GM is interesting to me because the thing is look, you've got this range. All right, we were trading in this range for a little bit, broke out right there, but the breakout was on a divergent high. You still had the negative divergence. You broke out, you back tested, there was support, popped it, back tested again, and today basically breaking back below, back into that range. So if they don't pop this up and hold it, then that tells me this is going back down to the bottom of the range and probably going to break down, but minimum back down to 42.08. So the daily close will be telling here. If they can't prop it back up and get it back above that level of resistance, which right now is about 46, then down to the bottom of the range, it's likely going to go. Gold and really gold stocks, I don't see much going on right now on these. GDX back down some support, 33.30, little bounce off of there. I don't know. I think it's probably going to go a little lower. You've got another reaction low at 32.35, and then the 200 and this breakout point. This would actually look like a better buy zone. You can see on the daily chart, we had this downtrend line where we had several reactions. If we trade down here, that's good support. That would be the area where it'd be very objective to go long, down around the $30-ish range in the 200-day moving average. So that's, I don't know, if I had to guess, that's where I think it's heading. It's just, I don't see much, so I'm just kind of sitting on the sidelines on the gold trade right now. And that's really all I've got. So, to wrap it all up, keep an eye on the semiconductors, keep an eye on especially Nvidia. This is likely going to be the key to the market. So if this thing starts dumping, I really think that you're going to see a lot of other stocks start to dump as well. As long as this one's holding up, the market's probably okay. So keep an eye on those. And then, yeah, we have some individual trade ideas I've kind of put out there. So I'll wrap it up here, get the video out, catch you guys on the next one. Take care.